Hey friends, Bitcoin is very likely heading towards the $74,000 mark. Is it so or not? We'll definitely discuss it with you now. Plus, I'll also share my thoughts and opinions on Donald Trump's recent speech at the crypto summit. He talked a lot about stablecoin regulation in the future, so we'll discuss how this could potentially impact things. And of course, we'll look at Ethereum, the Standard & Poor's 500, and figure out how to navigate the current market conditions. Let's move on to the charts. Be sure to subscribe if you haven't already. Don't miss this video and heed the important advice, friends. If you haven't subscribed to my new Telegram channel yet, I highly recommend it. I share market updates, interesting setups, and analysis there. Even on days when I'm not making reviews, there's a link to my Telegram channel right under this video. It's called Alex Crit File, so hop in and subscribe. But now, let's get down to business. I suggest starting with Bitcoin because at the moment when I filmed the last review, the situation was developing very interestingly. Let me remind you what was happening. First of all, Bitcoin was breaking through the 200-day moving average. This was the zone. And at that moment, we only saw a green candle. I mentioned that it was very important to understand whether we would hold above the 200-day moving average or not, because above us, there is a huge layer of resistance expressed in several aspects. This trend is indeed global, and Bitcoin is within this price channel. We will definitely discuss the price channel in the second part. We have a 200-day moving average. While it's not a significant volume level, it serves as a psychological mark that many players in the market closely watch. Not only retail traders, but also many institutional players use a wide range of strategies specifically related to the average. For example, when the market reaches the average price level, robots automatically start going long, initiating buy orders. Conversely, if we are trading under a trend line, these robots start trading against it, initiating sell orders. This zone is not only psychologically important for traders, but also algorithmically significant for automated trading systems. Then we have a large volume level above in the $86,000 zone, and all this is currently putting pressure on Bitcoin. It doesn't allow him to grow now, which means there will be more detail. Take a look. The key point I mentioned earlier, and I want to emphasize again, is that it's very important to stay above the 200-day moving average with daily candles. This is crucial so we can discuss continued growth and the potential for new all-time highs for Bitcoin. We not only failed to stay above the 200-day moving average, but we also immediately returned below it, with the body of the candle closing back under this significant threshold. Yesterday's candle, although very, very, very small in size, also closed with its body below the 200-day moving average. Therefore, at this moment in time, we are very much obliged to closely monitor this particular zone with great attention. Accordingly, if Bitcoin, for example, today is our weekend. And by the way, what is the situation on weekends? It is always reduced market liquidity. That's why we often see some squeezes on weekends. Therefore, we need to closely monitor the current situation, as Bitcoin is below the 200-day moving average. Additionally, I want to draw your attention to this price channel for a moment. Why is that? Because we've been moving within this price channel, moving and moving. Please take a look at the current situation. We have now reached the upper boundary of this channel. If we continue to develop the structure as it stands, it is likely that we will see a move down to its lower boundary. This lower boundary is precisely in the range of $70,000 to $73,000. Therefore, considering all factors, the probability of a downward move is, in my opinion, much higher than an upward move because we have resistance above, which is our trend line. We have a 200-day moving average, and below, everything fits within a specific pattern. Therefore, my current priority in terms of positions is that I always consider the market as a whole. I have 90% of my positions always in long simply because long is more profitable, as short has its limits. This approach ensures that I am maximizing my potential gains while acknowledging the inherent constraints of short positions. There is no mathematical limit to zero for longs, which is more advantageous. Nevertheless, where does it make sense